How are these carbon clauses being structured, and are there any issues that companies are facing with them?
We're definitely hitting what we'd call the carbon clause era. That's a good call out. CBAM is a difficult variable to price due to the variables that won't be certain until future dates.
My name is Charles Osborne, Director at TFG.
So I'm Adam Hearne, CEO of CarbonChain.
Welcome to Trade Finance Talks, your go-to trade, treasury and payments podcast. Brought to you by Trade Finance Global.
Welcome everyone to the next Trade Finance Global Trade Finance Talks. I'm very pleased to be joined by Adam Hearne, CEO and co-founder at CarbonChain. So this podcast will be delving deep into the impact of CBAM. What better way by talking to the experts? So, Adam, thank you very much for joining.
Good to be here. Thanks for having me.
No worries. For most people that are watching, everyone's going to kind of know who you are and know who CarbonChain are. But for the benefit of anyone that perhaps hasn't come across CarbonChain, maybe you can give a quick minute.
Hasn't heard of us. Would have thought, yeah. So I'm Adam Hearne, CEO of CarbonChain. I have a background in mining and logistics. I started my career at Rio Tinto many years ago. So spent 12 years there, worked across several product groups, including central functions. So I worked across Rio Tinto diamonds, iron ore, coal, copper, and ended up in London's head office where I was looking at project finance work and doing some economic modeling for different Rio Tinto operations. And then moved on to Amazon where I looked after the European supply chain. And finally, 6 years ago, we started CarbonChain, where we wanted to make sure we were the company that was doing the best job of carbon accounting for the commodity sector. And we specialize in EU CBAM regulation, product carbon footprints, and corporate carbon footprints. So our clients are mostly in commodities trading, commodities finance, and industrial manufacturing like steel, aluminium products.
Great. Thanks very much for that, Adam. So we're now just weeks away from January 1st when CBAM moves from its transitional reporting phase to the definitive regime requiring actual certificate purchases. So what's at stake for companies that haven't yet applied for authorised CBAM declarant status?
It is an urgent time for companies. So businesses require the authorised declarant status to import CBAM goods into the EU next year. They'll need to ensure that they have an application lodged as soon as possible, but the official deadline is the 31st of March 2026. If they fail to obtain authorization, not only will this result in them having to pay the CBAM liability for any goods they imported from January 1st, 2026, they'll also face penalties per tonne of CO2 imported. And these penalties are huge. So fundamentally, the authorized declarant status is a business imperative and really a license to operate if you're an importer of CBAM goods. CBAM goods being aluminium, steel, fertilizer, cement, hydrogen, or electricity.
You touched upon the impact of CBAM for importers of goods into the EU. So how does this differ from its impact on importers of goods into other countries?
CBAM effectively places a carbon cost on goods as if they were produced wholly in the EU. So it's trying to level the playing field between the carbon price paid in the EU by EU producers of CBAM goods and the non-EU businesses that produce and export these goods to the EU. There are around 10,000 producers in the EU that are under the emissions trading scheme. These businesses pay a cost associated with their emissions relative to a benchmark. From 2026, this benchmark is set to go down as the phase-out of free allocations of emissions takes place. This will increase costs for EU-based businesses operating under the EU ETS, and in order to ensure this does not disadvantage their competitiveness, the EU introduced the EU CBAM. This mechanism looks to ensure that carbon price equivalent, that which is paid by EU producers, is paid. So non-EU producers are permitted to deduct any effective carbon price paid overseas in their home jurisdictions.
At this point, it's very good to get a bit of an education on it, which you provided, which is great. Perhaps you can share a concrete example of how early movers of reporting carbon data are finding a competitive advantage.
There are two key cost variables when it comes to EU CBAM: the emissions intensity of the goods and the carbon price in the EU. The carbon price is set based on the emissions trading system's auctions, and this year has fluctuated between 60 and 90 euros per tonne of CO2. This variable can be managed via a range of hedging tools and is very liquid. So many importers are well aware that they can control this exposure to a certain extent. Emissions intensity, however, is a variable that doesn't have the same level of transparency and is reliant upon the specific non-EU producer measuring and sharing their emissions data in a compliant manner with the EU CBAM emissions measurement methodology. So it's quite hard for a lot of companies to adapt to such a rigid methodology. CarbonChain works directly with importers, and we cover over 80% of aluminium and steel and fertilizer imports into the EU at the moment, slightly over 50% for fertilizers. And a great case study to your question is our support on the carbon accounting side. It's our direct engagement with a number of aluminium rod producers, to pick an example, who've never performed product-level carbon accounting before. So on behalf of those clients, we work with these producers to set up their carbon accounting infrastructure, and through CarbonChain, they ensure they calculated these emissions in line with the regulation. So we've seen results where cost savings not only come from clear awareness of the correct emissions intensity, which we help them calculate. For example, one producer can have 7 tons of CO2 per ton of product down to 2 tons of CO2 per ton of product. So this could represent a €350 per ton cost saving just by getting the correct emissions information via CarbonChain. And not only that, they can avoid the use of the EU's punitive default values, which are currently being used in place of actual emissions data from the producers. And it'll facilitate significant cost savings in the long run if these supply chains set as the benchmarks and phase down to zero.
Well, this is exactly why you get the experts in place for this exact kind of saving. We're obviously seeing carbon terms increasingly embedded into contracts across metals and mining. How are these carbon clauses being structured, and are there any issues that companies are facing with them?
We're definitely hitting what we'd call the carbon clause era. That's a good call out. CBAM is a difficult variable to price due to the variables that won't be certain until future dates. For example, the carbon price is taken quarterly through 2026, and the specific installation and product level emissions intensities and benchmarks will not be available until post-verification in early 2027. So if you can put yourself in the shoes of some of these producers and importers, they've got to calculate price exposure based on benchmarks that the EU hasn't even published yet, which is just an incredible amount of uncertainty. So this is why contracting and pricing is hard right now. Building supplier trust in the emissions data and working closely with a business like CarbonChain to support this can help reduce the uncertainty associated with these variables and allow more accurate costing. CBAM is ultimately a polluter pays principle that is being adopted as local jurisdictions introduce emissions trading systems to capture their carbon-related benefits domestically, rather than see them go to the EU through the CBAM cost mechanism. In the short term, we do see some importers covering the cost of CBAM in order to continue specific supply chains. To future variables associated with CBAM, maybe many longer-term contracts have quarterly reconciliation components that look to reconcile the price based on updates to the legislation and changes to known variables, e.g. the crystallization of the quarterly certificate prices through the course of 2026.
Hey, enjoying the episode? Tap follow for more. Done? Let's get back to it.
The metals and mining space we're seeing huge opportunities in, so it's very interesting to see how these things are getting embedded into those contracts and actually how CarbonChain can potentially help alleviate some of these challenges. So that's very interesting. Just kind of moving across now, you've worked across Amazon, Rio Tinto, and now supply chain decarbonisation. From your vantage point at CarbonChain, why is yesterday's compliance infrastructure already obsolete?
So the compliance infrastructure we've inherited is literally obsolete from a technology perspective in many ways. I think it's still based on 1960s technology where they would just use electronic data interchange to send inventory signals back and forth back in post-World War II days. And the same data infrastructure is in place today. And from the experience of Rio Tinto to Amazon, it's effectively very similar, just trading the rocks for boxes. And I think what has changed is the ability to try to get through the layers of opacity. And so creating a more transparent supply chain is the key to modernizing the supply chain. I think we have to see these compliance and regulation moments not as compliance per se, but it's just actually a new protocol. It's a way of doing business. And I think compliance has been focused on cost a lot in the past, whereas the EU has made a very firm stance. They're not backing down. They're saying the way that trade flows around the world will now factor in the externality of carbon in addition to the traditional factor of price. And so that's an incredible upgrade based on that policy. And the technology platforms like CarbonChain are here to get the unit economics of that as affordable as possible so that people can focus on the work at hand, such as trading, and spend less time doing compliance work, which should just be a back office function ideally once we've rolled out our solution to different back offices.
You also mentioned a little bit more on the CBAM certificates being more price-based. With them being kind of price-based on the weekly average EU ETS allowance price, for companies used to a fixed price commodity contracts, this introduces obviously new volatility. How should procurement teams be thinking about this dynamic within pricing elements?
Procurement teams should think about CBAM certificates in 2026 getting priced on a quarterly basis, and then be aware that in 2027, they're priced on a weekly basis. Many businesses are looking to hedge their exposure to these fluctuations, and CarbonChain is actively working with a number of brokers and banks to facilitate this exercise for our clients. The EUA market is very liquid, around 800 billion in EUAs traded annually. As a result, risk management on this variable is easier, particularly with traders and active carbon desks.
In practice, how complex is CBAM proving to be? We're now obviously just weeks away from new transitional reporting phases. So what sort of issues are we still seeing within this?
Product-level carbon accounting is complex. It's doubly complex when your target audience may have never considered carbon accounting as an exercise until last year. I can remember starting CarbonChain 6 years ago, speaking to traders about the carbon footprint of their products, and it was an incredibly different concept to what they're having to manage day to day with local financing risks, logistics risks. It's yet another variable to introduce, and it's quite scientifically dense to get through. But it can be simplified significantly, and that's where we come in. Explaining CBAM and its wide-reaching implications for businesses has been an operational challenge that we've helped customers turn into an advantage. It requires contributions from sustainability experts, customs experts, finance, tax, and procurement, all those business units working together in order to enable compliance. One of the key drivers of the complexity is the regulatory challenges related to the last-minute updates. Changes are coming in, and implementation of the legislation is sometimes considered at risk when these updates come in. We're sitting 5 weeks away now from the definitive period where CBAM costs come into effect, and we still lack much of the regulatory framework under which we will be operating next year. This causes significant uncertainty, frustration, and confusion for market participants.
And Adam, what's the biggest gap between what CBAM requires and what suppliers can actually provide today? I know from seeing your event during LME Week, there was a lot of discussion around the supplier data catalog. It's an opportunity to maybe discuss a little bit more about that.
Yeah, as we've discussed, trusted emissions intensity data is a key stumbling block for many importers. We've spoken to some of the largest companies out there importing, and even with their market power, they find it hard to get suppliers to respond in many occasions. So the prospect of having to fall back on default values for CBAM is a costly reality for many businesses that have not invested the time and effort to build trust with their supply chains and facilitate the preparation and exchange of this data. CarbonChain has been very active in supporting global supply chains with their CBAM compliance, and this has culminated in the launch, thanks for giving it a plug there, in the launch of our CBAM data catalog. And it gives insights on CBAM data for over 2,500 producers of aluminium and steel alone, as an example. And we predominantly have very good coverage across primary producers and tier 1 consumers of the crude products. This forms the bedrock of reporting for the world's downstream product producers. With this dataset, we hope to facilitate thousands of downstream businesses with their compliance by significantly reducing their supplier engagement burden and providing them with simple tools to facilitate their carbon accounting. Further, CarbonChain's recent announcement with SGS, one of the world's largest verification providers, can help us set up the foundations with producers to have a clear track to verification in advance of their end of the first year definitive period. It's a huge chance for us to partner with such a trusted player like SGS. I should point out, though, they are independent. It's not an exclusive partnership. They can work with anyone, but we've been working with them for a long time on validation and trust of our numbers, and it's great to get them in, and also just facilitating thousands of businesses getting beyond this supplier engagement burden. The best way to engage with a supplier for this information is if you don't have to engage them in the first place, because it's so time consuming. So we have a lot of pre-baked answers on our platform ready to go to save customers time. And then ultimately, when we do reach out to suppliers on behalf of customers, we can reach out with a more informed opinion to save everybody time in the long run.
So with CBAM currently covering about 50% of EU ETS sector emissions, there's already talk of expansion to downstream products. How can businesses ensure they're building systems today that won't grow obsolete when CBAM inevitably expands?
As the ETS expands and the scope of CBAM extends to keep up, the requirements for accurate emissions measurement and tracking extends to businesses both vertically, so within the existing scope of the EU CBAM covered goods, and horizontally, so to a broader set of product categories, e.g. chemicals, copper. The other area of expansion to consider is the increase in adoption of other CBAMs and ETS systems around the world. For example, the UK, which is set to come into effect on the 1st of January 2027. Effective emissions measurement and tracking for these commodity products is set to become commercial license to operate for businesses as carbon-related liabilities are priced in. Businesses will face significant cost increases if they fail to take action to prepare for compliance and understand the implications on their own supply chains. CarbonChain has continued to facilitate carbon accounting compliance for broad commodity mixes, including all metals and energy products. So we continue to be in a strong place to facilitate all forms of emissions accounting across both CBAM and other regulatory reporting frameworks.
So this has been very, very informative. Really appreciate this, Adam, especially weeks away from such a pivotal date in the calendar. So this certainly won't be the last word that we have, and certainly not the last time that we speak to Adam and CarbonChain on all things CBAM. I'm sure there's going to be many new developments in the new year that we're going to have plenty to talk about. So it just remains for me to say thank you to Adam and thank you to CarbonChain for partnering with us on this. And thank you for everyone for listening.
Thank you for having me.